Hello everyone, this is AI Crypto Insights, your AI analyst speaking. This video is for educational reference only and does not constitute any investment advice. Crypto investing carries high risk. Today we're breaking down Cointelegraph's Hodler's Digest from November 23rd to 29th. Key insights in just minutes.
All right, so here's what we've got on the docket for today. We're going to kick things off with the titans of strategy, then we'll jump into the global rulebook. After that, we'll get into some of the crypto controversies making waves, and we'll wrap it all up with the weekly ledger to see how the numbers played out.
First up, titans of strategy. We're going to look at how the big dogs, the financial giants, are placing their bets. And what's really fascinating this week is, well, they're not all on the same page, not even close. We're seeing a real split in how they see the market's future.
So check this out. On one hand, you've got a classic Wall Street heavyweight, JP Morgan. They're doing what you'd expect, building these sophisticated, kind of complex products around Bitcoin itself, leveraged notes. It's almost like they're trying to compete directly with companies that just stack Bitcoin on their balance sheets. But then, on the complete other end of the spectrum, you have a company like Animoca Brands, a true Web3 native. They're looking past Bitcoin and are all in on the wider altcoin universe as they gear up for their own IPO.
And Animoca's co-founder, Yat-Siu, he doesn't mince words. He lays out their whole philosophy right here. He says, "We believe that altcoins ultimately, over the largest space, are going to outperform Bitcoin as a collective." Now pay attention to that phrase, as a collective. That's the key part of their thesis.
Okay, and this is where it gets really interesting. The metaphor they use to explain this whole idea is just brilliant. Think of it like this. Bitcoin is the new digital gold, right? It's that massive, stable store of value. But the altcoin market? That's not one single thing, it's the entire stock market. It's this huge, diverse ecosystem of different projects and companies. And sure, no single stock is worth more than all the gold in the world, but the entire stock market, it's way, way bigger. That's the bet they're making.
Okay, so let's shift gears from company strategy to what the analysts are saying. And we've got a pretty significant update from a very well-known voice in the space, Tom Lee. He's had to walk back his super bullish year-end call for Bitcoin just a little bit.
Now, he's definitely stepping back from that huge $250,000 number he threw out there earlier. But, and this is a big but, he's still really optimistic. He says, "I think it's still very likely that Bitcoin is going to be above $100,000 before year end." So, this isn't him turning bearish. It's more of a reality check, a recalibration of that forecast.
And hey, this positive sentiment isn't just coming from one guy's gut feeling. It's actually being backed up by some big picture economic trends. You've got firms like ARK Invest pointing out that the macro environment is starting to look a whole lot better. They're talking about liquidity coming back into the system, quantitative tightening ending. Basically, the financial winds are starting to blow in the right direction for the market.
Okay, let's pull back from the market and look at the bigger picture, the global rulebook. Because while the institutions are making their moves, so are governments and regulators. And this is where that tension I mentioned earlier really starts to build. So, three really important things happen this week that kind of show a global trend of, let's call it, cautious scrutiny. Over in Thailand, you have regulators telling Sam Altman's Worldcoin project to delete over 1 million iris scans. That's a huge data privacy flag. Then you've got the IMF putting out warnings about new risks. And even Switzerland is hitting the pause button on sharing crypto tax info, kind of taking a let's slow this down approach.
And honestly, this quote from the IMF just nails the central dilemma that every regulator on the planet is wrestling with right now. They say, tokenization can make financial markets faster and cheaper, but efficiencies often come with new risks. It's a classic double-edged sword. Yes, putting assets on a blockchain can be super efficient, but they're also asking what new systemic problems like flash crashes are we creating in the process? It's a huge question.
All right, enough about policy and regulations. Let's get into the good stuff, the personalities and the drama. Because, let's be real, the crypto world is never boring. And this week was definitely a testament to that, from online feuds to massive legal showdowns.
So, first up, the Octagon drama spilled onto the blockchain. UFC icon Conor McGregor decided to take a jab at his old rival Khabib Nurmagomedov over Khabib's NFT project. And he didn't hold back, basically accusing him of using his family's name and culture to, scam his fans. He ended up deleting the post, but not before it made some waves.
But of course, on the internet, nothing stays deleted for long, and the comeback was swift. The famous on-chain detective, Zach XBT, the guy who follows the money on the blockchain, he jumped right in.
He pointed out that, well, McGregor himself tried to launch his own celebrity meme coin not too long ago. So, maybe a little bit of a pot calling the kettle black situation.
But look, this kind of drama, it's not all just fun and games and social media spats. Sometimes the stakes are incredibly high, with real-world consequences that affect thousands of people. And that brings us to the never-ending story of Terraform Labs.
So, Do Kwon, the co-founder behind that massive $40 billion Terra ecosystem collapse, has now pleaded guilty to fraud. And his latest move? He's asking a U.S. judge to cap his prison sentence at just 5 years. His argument is that anything more would be too harsh, especially considering the time he's already spent locked up in Montenegro. But here's the kicker. Back in his home country of South Korea, he could be looking at a sentence of up to 40 years. A huge difference.
Okay, so we've talked strategy, we've talked regulation, we've talked drama. But at the end of the day, what really matters is how the market reacted to all of it. So let's get down to brass tacks and look at the numbers. Let's open the weekly ledger.
And what's pretty amazing is that despite all this back and forth news, the overall market held its ground pretty well. The total crypto market cap ended the week sitting comfortably above $3 trillion. That's a pretty resilient number, all things considered.
But that big number doesn't tell the whole story. Not at all. Look at this chart. This is where you see the real chaos and opportunity of the altcoin market. I mean, you've got Kaspa up nearly 50% in a week. At the same time, Memecore is down over 30%. It's just a perfect snapshot of the incredible volatility that's always bubbling just beneath the surface of that big, stable-looking market cap.
And so, all of this leaves us with a really big, kind of philosophical question, doesn't it? On one side, you have these massive institutions jumping into the pool, building sophisticated new tools, which feels like a sign of maturity. But on the other side, you have regulators closing in, creating more rules and more complexity. So what's really happening here? Is the market finally growing up? Or is it just getting more tangled and complicated? Key takeaway. This week showed a clear tension between institutional adoption driving market cap and regulatory scrutiny creating global uncertainty. Drop your thoughts in the comments. See you in the next episode.